Hey folks, welcome to Pro Trader Strategies Market Commentary for Wednesday, July the 3rd. My name is Eric Wilkinson, and some of you may recognize me as the Wolfman. I'm here to teach you guys some different strategies you can implement into your portfolios, but please do that in your own way. Also, remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data. Today was the day where we got a little bit more economic data than normal because Thursday is a holiday here in the United States, and they moved some of those forward. We're still getting non-farm payrolls on Friday. Sometimes when there's a holiday there that they will move that data point, but they're not doing that this month. So we still get non-farm payrolls on Friday. But let's get on with it here across the pond. We got a bunch of PMI numbers, Purchasing Managers Index. Remember, anything above 50 is expansion. This isn't the most important economic data point for the European region. That is in the form of the flash estimates, but I'm just going to go over these because it gives us a bit of an idea as to what's going on. Now remember, the flash estimates have been showing manufacturing weakness in France and Germany. So all of that being said, that is something that's really going to drive the economy. Then we also have the service sector PMIs. That's what we're getting right now, but it's not in the form of flash estimates. So like I said, it's not as widely looked at. All of them came in above 50, which is a good sign. All of Europe, basically Spanish, French, German, all of them came in above 50 and above expectations, or in line with expectations for the most part. The one that kind of bumped that trend was Great Britain, and they got their services PMI coming in at 50.2, expected to be 51.0. So just slightly lower than expected, but again, still higher than 50, which shows expansion. Then moving back here in the United States, we got ADP non-farm payroll came in at 102,000, expected to be 140,000. So less hires than what was expected. And last month's number was revised up slightly from up to 41,000 from 27,000, originally listed at 27,000. They revised that up to 41,000. Not going to make up for that headline number, but again, not one of the most widely looked at numbers, but it should give us a little bit of an indication as to what's going to be going on Friday. And then we got final services PMI in the form of non-manufacturing ISM, which is the Institute for Supply Management. PMI coming in at 55.1, expected to be 56.1, so slightly lower than expected, but again, it's still above 50, which is expansion. We haven't really seen this economic data point in the United States come in below 50 in quite some time, since basically 2000 and probably goes back to 2000 and maybe 10 or something. Is where we saw our last reading. Really, December of 2009 was the last time we really saw this data point go below 50. So a long expansion, something we've been talking about as well, is this is the longest expansion phase that we have seen in our economy. That being said, that's all of those PMIs being above 50 and not going below. That is a good thing, but everybody's kind of waiting for that shoe to drop. And then we look over at factory orders that came in at negative 0.7%, expected to be a negative 0.4%, and they revised last month's number from negative 0.8% down to negative 1.2%. So another, 0.4% lower there, making that headline number again look even worse. So factory orders not doing too well. Crude oil inventories. Remember, last month we got that huge drawdown of 12 million barrels. This month we were expecting a drawdown of 2.8 million barrels. It came in at a negative 1.1 million barrels. Something that when we drill down on those data points on that crude oil inventories, we see distillates, which goes into the manufacturing, that actually started rising. A little bit more than expected, and then we saw gasoline come off a little bit. So the inventories in gasoline coming down more than expected. So the manufacturing side not showing a little bit of weakness, but we're seeing on the retail side, consumer demand for oil still doing pretty well. And then we've got natural gas storages coming in a little bit later today, but I've been shooting this early, so I should be getting that out a little bit later. I'm not going to be able to probably get it done while we're doing this daily market commentary. So let's get on with the overall markets here. We've got crude oil right now showing a little bit of strength after that economic data point. We saw some weakness, but we're seeing a little bit of a bounce here, or a little bit of support in and around these areas. As you can see, it almost lines up perfectly with yesterday's bottom, but I don't have anything lined up with that for a Fibonacci or anything like that. As you can see here, yesterday's line in the sand right there is pretty strong. And then we've got this doji trying to make it look like we're finding a bottom here. Again, I would still like to see us break this pattern and drop down around the $52.50 a barrel range, just because that gets that oil price down below $3 or very close to it, which I think will help with the overall economy moving forward. And then we can go over and look at gold futures. They're starting to move higher again today by about $15 almost at this point after yesterday's big rally. I was expecting us to, especially after Monday's move down to here, I thought we were going to try and cover this gap here. It's not looking so good right now, as yesterday's rally up to that point started breaking that trend. It looked like we were going to cover the gap, and I held on to my GDXJ thinking we would cover that, but not happening. Getting that move today kind of hurting my GDXJ position. But I've got a great trade that I think I'm going to be putting on for this webinar that we're doing today, which is on the straddle. So if you guys want to learn how to build a straddle correctly in the right environment, knowing all of these different things, I'm going to build rules around this to implement this strategy so that you won't have to second guess yourself whether or not it is the right time to put on a straddle. I'm going to show you how to do that, and when we come up with our assumption, we're going to build this thing out according to our assumption. So check that out today. Pro Trader strategies on the straddle for a neutral bias. So check that out. Should be a good one. And then on to the bonds. They're moving higher today, making their highs as, the 52-week highs, as this market is signaling to the Fed that they want rates to be cut. Now, all of this is dependent on China. If China's tariffs goes through, then we'll probably get a rate cut. But if the tariffs kind of hold off, or we come up with an understanding with China, then I think that the Fed is going to hold off on any rate hike or any rate cuts because they're going to see that we are going to be doing okay. Those higher tariffs or that tax on the economy isn't going to need to be offset with a lower interest rate. All right. So bonds trying to make that happen by signaling to the Fed, with the bonds moving higher, trying to signal that rates should be going lower over the foreseeable future is what it's really trying to say. And then we go over to the VIX. VIX is trying to make a bottom. It's out of the teens just barely right now. As you can see, we're trading 1297. I'd like to see that start to spike. It's really hard right now to find anything out there that has high implied volatility to do some premium selling strategies. So I'd like to see some volatility start to spike here so that we can get in that game again. Now, something to note right now, we are at we're at historical highs right here with the NASDAQ at 78.65 and a half. Right around there is the highs. As we can see here, if we take off the day or the overnight trades, we can see that trade is the high, the 78.72, which was printed today during the day session. All of these lines over here, those were printed overnight, and the day session is really wanting to print that during the day to make it a real number, and it's just a function of the markets. They just want it done during open market operations so that they can say that they have the real price range. And I think we're going to try and print that before anything else, any counter move to the downside happens at this point. We're seeing those highs happen in the E-mini S&Ps. Hasn't quite happened in the NASDAQ, as we saw that a month or so ago where we were making those highs overnight and the market would start peeling off. Again, we don't have to worry about that with the E-mini S&Ps. As you can see here, we have those highs printed during the day session from the basically covering the overnight trades there. So day sessions covered it for the E-mini S&Ps. NASDAQ not quite there yet, but probably looking to try and cover that before we see any type of move to the downside, like I said. All right, overnight inventory was pretty long. As a matter of fact, overnight inventory being long didn't really phase the opening of our trade. As you can see, we just started rallying right out the bat, which is a very bullish sign, generally speaking, when the market doesn't try to flush out the whether the overnight inventory is long or short. When they don't try and flush those guys out of those positions, it has a tendency to be a very strong move in that same direction. This being overnight inventory was long, we're making a very strong move to the upside there. But again, it's still a waiting pattern for me right now. A lot of those charts that I was looking at yesterday that kind of started looking like we were making a bit of a top, looking for some confirmation. We never got that confirmation yesterday, so the market is still in flux as to what direction it's really trying to make. It's a battle of the bulls and bears for about a couple of weeks now, and we still haven't gotten any discernible direction out of that. So it's very difficult to add positions when I don't have a market assumption. All right. So like I said, I haven't added anything or taken anything off. I'm just sitting on my positions, waiting for everything to kind of work out on the probabilities. So we're going to have to sit tight and wait and see what happens. We've got earnings right around the corner also. So that's probably going to be where my focus starts shifting to here pretty shortly. All right. That's all I got. If you can't take that, take it easy.